Good afternoon, everyone. Shaun O'Neill here with Concord Servicing, and welcome to what we hope will be the first of many LinkedIn Live events where we elevate the conversation around the ABS and the ABF markets. Today's discussion is really focused on navigating a new reality of asset servicing, lessons learned from Tricolor, ABS East, and what's next for 2026. Recent market events have revealed that a critical blind spot across asset-backed financing is that servicing is no longer a back office function. It's your first line of defense. We're going to focus on some key discussions and themes that came out of last week's ABS East conference, along with exploring servicing and servicing transfers. Once an overlooked operational detail, this has become a competitive differentiator that can make or break portfolio investments and their overall portfolio performance. Joining me here today is Concord's own Tom Myers, Senior Vice President of Partnership and Sales, along with Nicole Byrns, industry veteran and partner in Dumar Capital Partners. Nicole, why don't you introduce yourself first?
Yeah, sure. Hi, it's great to be here today and glad to be in this conversation with you guys. So I am an asset-based veteran for over 25 years, working both at financial institutions and asset managers. I most recently started my own company, Dumar Capital, which is a asset-based finance fund. So we're in fundraising mode right now, as well as a senior advisory firm that's servicing the asset-based finance sector.
Great. Thanks, Nicole. And Tom?
Yeah, Shaun, thanks for the intro. Tom Myers, as Shaun mentioned, SVP of Partnership and Sales at Concord. I've been with Concord for 3.5 years, actually been affiliated with Concord and Shaun for over a decade now, in particularly serving the financial side, services side of home improvement and solar energy efficiency. But leading the charge today with Concord's clients and, partnerships on primary servicing, and what we're going to dive in today is backup servicing, or should it be called something else, and all of those ancillary services that go along with that secure the assets that are a little bit under fire today.
Yeah, thanks again, Tom and Nicole, and look forward to a lively discussion. And obviously, I think there's an opportunity for participants to ask questions as well online. So we'd welcome that. And I think Tom posed a really good question right out of the gate. Is it backup servicing, or what is it? Is it something more than that? What does the market need? But let's start out by talking about ABS East. It was, I think, a little over a week ago, 8,000 people attended the event in Miami at the Fontainebleau, and a lot of really productive conversations, important themes emerged. And from my perspective, what I heard consistently in the dozens of conversations that I had with originators, investors, and banks across the board was three things. One was data, and data quality and accessibility. How is that data getting to the reporting agencies, whether it's the originator that is doing the servicing, the third-party servicer, the trustee? How's that data? Who's looking at the data, the accessibility of that data, the frequency of the data? And Concord has been servicing obligations for over 35 years, and it starts with data. It starts with whether it's a conversion that we've done over 400 of them, or it's a new client. It's mapping that data, and it's making sure that you're getting that data. So data was a big thing. Compliance and compliance framework. What is the organization that's managing these assets? We were having a conversation in preparation for today's call about what is servicing. Servicing is managing assets. It's not just billing and payment processing, but it's really managing assets for performance, right? Understanding the assets. So understanding the compliance around it, and what are the requirements around compliance. And I think the most important thing, and the theme that resonated across everything, was oversight. Where is the oversight responsibility? Who is looking at the data? Who is making sure that the compliance is being adhered to? Where does that responsibility lie? I mean, I think I'll cut to a short at the end and say maybe we'll get to this point, but I think it's a shared responsibility across every player: the originator, the investor, the bank, the trustee, the servicer, the company that's doing the backup servicing, or whatever that might be. But again, the three things that resonated with me was data, compliance, and oversight. But Nicole, why don't you just go ahead, share what your thoughts were around the conference, and maybe piggyback on what I shared or share some additional thoughts.
Yeah, so one thought I have on what you just said is you can't have the proactive oversight without the data. So you have to solve the first problem in order to tackle the third problem. So they're sort of kind of attached there. And you're right, data is, in fact, because we're getting more and more data every day. And the question is, how do you process it effectively? What's the integrity of the data? Is the data I'm looking at accurate? But what I heard from my side is the importance of transparency, in that a lot of investors were saying, look, if my originator is having problems, I want to know about it early. Like I'm okay having that tough discussion because we can together tackle this problem before it blows up into something. And that's when you find with a lot of the situations, both the ones current and the ones in the past, is that there's been some type of financial stress at these companies that causes them to do something to either hide it or get out of the hole. And rather than being very proactive and talking with their partners to be transparent, to figure out, to problem solve this together. And, Shaun, you just sort of talked about all the different parties involved, and it's a lot of just cooperation among them. Like, we're not competing against each other. We're all trying to work together to try to manage the risks of all the exposures that we're dealing. And so it's, you don't want to sort of play off the trustee from the rating agency, from this party, that party, the servicer. You want to bring everybody together to have the equal communication and the information flow between all the parties. So everyone's informed, because you're all seeing different parts of the pie. And so, seeing what one person sees might kind of key you into something that you were looking at but didn't really understand, and now you realize it's a risk that you need to bring up.
Yeah, no, agree 100% on that collaboration, that there's so many people that are involved in this, are all vested in making sure that everyone is doing their job and everyone is, there's a positive outcome of all of this. I mean, in the conversations that you had last week, I'm curious, did you get a sense that there was a lot of collaboration, or, maybe in some of the more recent things, or were there a lot of, well, why didn't this get done, or who didn't do what?
Yeah, I think there's still a sense of, especially nowadays, since there's a lot of capital in the sector that needs to be deployed, I think there's still a sense of, also the private nature of the market, that, what we do and what the information I have is my niche, is my edge. So I don't want to share that with the market or with sort of my partners, whether it's, these other parties that sort of perform a function in my investment ecosystem. So I think there's still a little bit of, keeping things to yourself. I'm not seeing it quite open up as much, but I think going back to your data thing is that once they figure out the data accuracy and the accessibility, that might open up a little bit.
Yeah. Okay, great. I appreciate that. Tom, what was your experience, or what were your key takeaways from the event?
Yeah, I think it's really interesting. I mean, you guys touched on all the things that are really important. It's that collaboration, obviously data quality, data frequency, and then what's the expectation of that data? And then how are you communicating that to all the parties that are kind of disaggregated in this space? And from that disaggregation perspective, I think there's an opportunity for us to re-aggregate some of these services so that they're more in line and more efficient and have a little bit better oversight. I think what's really interesting is the buzz and the talk is, what's next? How do we fix things out of recent bankruptcies, fraud, and we were just talking about, it's not necessarily just the fraud opportunity that really kind of raised awareness around, the services that are done, in particular from Concord. It's, recent bankruptcies, and there's been plenty of them, in the solar home improvement space. And then you kind of tackle all of that with all of the liquidity out there. So Nicole, you kind of talk about all this private capital that needs to be deployed, and then the competitive nature of that, those banks that are trying to compete against each other to get that money into, the originator's hands. Is that actually, potentially harming the process, in the sense that we should be putting more belts and suspenders instead of taking them off because of the competitive nature of trying to deploy that capital, right? We still have to continue to be extremely cautious and provide the services to all of those that are whether it's on the warehouse side, the forward flow side, the securitization side, private placement, whatever it is, so that there's, the expectation of performance on the back end, which is my rate of return on my investment, right? Mm-hmm. And so, what does that kind of mean in a nutshell? And I will gladly say this, that, we've talked about it for a number of years, is that let's really get rid of this. The check the box doesn't work, hasn't worked for an extended period of time. And so you have to have real, true services when it comes to collecting that data. We want to wipe cold backup servicing off the planet, right?
I think you should actually wipe off backup servicing. I think backup is a misnomer. I don't think it's a fair term. It's not backup. It's not an insurance policy. It's a day-to-day active management of the portfolio.
Yeah, I love that approach, Nicole, and that's really how we see it. Mm-hmm. And so, from we don't have the new name yet, but we're going to come up with it.
And, we can come up with it today. Maybe we'll coin a new phrase.
Suggest something. So.
Yeah, right.
I just want to interject real quick, guys. I think the conversation is going phenomenally well, but I think we're transitioning to like beyond feedback of what we got from ABS East to really one of the hearts of the next discussion is servicing and servicing transfers. What is servicing today, right? What is it all about? And let's just keep on this conversation. I just wanted to kind of transition to the first part to the second part. So now we're into servicing. And what does it mean to be a servicer, or to, let's say, shadow service, be that company that's paying attention to the originator for the benefit of the investors, right? For the benefit of the people who have invested in these consumer or commercial assets. Tom, why don't you talk a little bit about what does it mean to be a servicer? It's not just, making payments and like you said, Nicole, making phone calls, right? I mean, there's a lot of moving parts to a servicer. So, and even in specific asset classes. So when that servicer, there's a need for that servicer to go away, whether it's a transition because somebody bought a portfolio and investor wants another servicer, or because there's financial challenges, there's a potential pending bankruptcy. Because ideally, you'd like to transfer before bankruptcy, because if you wait until bankruptcy, then you've got other challenges. But Tom, why don't you comment a little bit about servicing and all the different moving parts of servicing?
Yeah, and I think to put a wrap on, kind of what happened at ABS East was, and maybe if you go back 12 months ago to last year's, people were talking about what should happen in the market and in the future. And then some more things unfolded that were negative in the market with bankruptcy and fraud. And everybody talked about, we have to do these things, right? So that segues into what is servicing today. And then what's the expectation? And, I think as we talk about a potential, shadow, whatever you want to call it, Concord was pretty adamant in our booth, and we had great success talking about credit administration. It really is a bigger overarching picture in terms of your portfolio management. And it's not just, this insurance policy. That's a terrible way to frame, millions and billions and trillions of dollars that are out there in the space today. So let's get rid of those, old types of terms, and let's talk about what really has to happen and what has to happen from that, warm parallel shadow servicing. I'm kind of liking this, Shaun, shadow. Is you're actually collecting the data, you're mapping the data, you're analyzing the data, you're running a T-val report on the data, you're sending certificates. And then is that enough if it's monthly, or is it weekly? Is it daily file? Mm-hmm. What do you actually, the frequency of that data, like I said earlier, the quality of the data, the frequency of the data, and then how are you analyzing that data? We work in particular in these two asset classes we're talking about, solar and the subprime auto space. We have lien perfections, we have titles, and we have UCC1 filings that are on these assets. And how is that being managed on the back end to make for sure that we're not double pledging, making for sure that those things are done, or the originator is putting the UCC1 in the name of the actual asset owner, right? Mm-hmm. We see that as an opportunity for improvement. And then those proactive kind of approaches, especially as you take a look from this, if we're in the, we'll just keep calling, we'll call it backup, but for now, whatever. if you're in a backup scenario, shadow scenario, we need to have early conversations about potential trigger events.
Mm-hmm.
Nicole, as you were saying earlier, this earlier conversation we had about, once a BK is filed, you're too late. You're stuck, right? You're paused on transferring those assets to the, onto the successor servicer. And then, with that said, though, too, is, that the shadow servicer has to have a really good, solid successor servicing agreement in place with price, with expectations. And then again, we talk about, transaction data, but oh my goodness, you have ACH, credit card, you have all of these other types of things.
Website hosting all those credit card payments too. Yeah, it's
yeah. So it's not data in a box. It's a lot of different.
No, there's all the customer communication. It's the consumer portal. Do you take over the existing servicer's operation? Is it a lift out or is it a takeover and it's a transfer? It's not uncommon in a bankruptcy where the servicing stays in place, in many cases, because that's the key asset, right? If a company goes under and they're an originator, at the end of the day, their most important asset is the servicing revenue they're generating from that portfolio. So there's a strategy around that as well. But Tom, you started pointing out some things around specific asset classes like a solar, or, if you're in auto, which is, the Tricolor thing. I mean, you've got repossessions, you've got, the remarketing, you've got those assets that need to be managed on a regular basis, or any other title light asset, that might be power sports, RV, or marine. And then you've got unsecured assets, marketplace lending, where there's really nothing there. You're just pursuing the consumer. What's the loss mitigation strategy? I mean, as a backup servicer, do they have asset class experience, right? I mean, that's something that we are really cognizant of and want to pay attention to. And I think it's something that's been discussed in the market. I mean, Nicole, you mentioned earlier in our conversations about having to transfer servicing. What does that look like? Maybe you can talk about one or two experiences, maybe a good one and a bad one.
Yeah, so I've had both good and bad, but I think you guys brought up a really interesting point. People are talking so much about the two big bankruptcies that are in the news, but you do transfers all the time, right? Yep. I mean, how many have you done this year? You've probably done a lot, and so people I think need to realize these transfers happen all the time. It's just that usually you only hear about it sort of once in a while in the news, or maybe unfortunately you've had to go through it in your, in an investment situation. And the thing is that it's about being prepared. It's about being prepared both at the asset owner level and the servicer level. Like, are you prepared to take on these assets? Do you have the information you need? Do you have kind of what I've written about in the past is, do you have the infrastructure in place in terms of the ACH files, the data files, all the staff. And, I've been through situations where lights went out, nobody showed up to work that day, and we didn't even have the data. And what we also, when we woke up and found that this was going on, we didn't even have control of the cash because the servicer had outsourced all the different processes to other vendors that we couldn't step into those contracts. And so a lot of those vendors were unpaid, and they said, we're not going to release your cash or release your data until you pay this outstanding bill from the old servicer. So we really kind of held over a little bit of a barrel in terms of trying to get control of the portfolio. And then I've had ones where, it's just the company's going out of business, a very orderly sale, services being transferred. And some of those I actually find some of those are kind of fun. This particular one, people would actually go into a store and pay their bill. And so we had to sort of was designing posters and customer mailings about trying to, get people to start mailing in their payments. So, they can all be, it's a process, and it's about, managing sort of a company, but it's really about, kind of being prepared, working with a partner that knows all the steps, knows the ins and outs of like designing a poster, putting it here and not there. But it's about experience. But I think one thing though that you also brought up is, especially in some of these asset classes, people kind of tend to like penny pinch a little bit and saying like, well, I won't file the UCC, or I won't do this, or I won't like transfer it to a vault or something, the title or the note to the vault. And I guess for your experience, how much has those sort of nickel and diming of all these sort of various different services you can choose from, how much do people really save in the long run? Does the risk outweigh the money that you're saving?
I mean, that's a great question. And I think, Tom, I'll let you chime in as well. But I would say, it depends. I mean, it depends on the underlying asset and where that asset's, where it sits in the credit stack. I mean, if it's high quality portfolio, I mean, UCC filings, most companies, not most, many companies won't file until it gets a level of delinquency or there's a certain dollar amount. And I'll just say anything over $25,000, we're filing a UCC, or anything that goes 30 or 60 days, we're going to file a UCC to protect our interest. That seems to be a fairly prudent approach versus not filing at all. Doesn't make any sense. And filing 100% on every balance, even if it's a $10,000 loan. If you're going to have a 5% default rate, you can quickly do the analysis. But Tom, what's your thoughts on that? I mean, we work in the world,
Yeah, really great points. And penny pinching is not a way to look at these large portfolios of hundreds of millions of dollars, for sure, especially in an ABS. I think it is asset dependent. I think it's credit box dependent, right? So I think if you take a look at a high FICO home improvement solar portfolio, there are subprime solar portfolios out there today floating around. So those are two different, credit boxes. So those are two different ways to approach that. And I think you would want to be on the safer side on a lower credit box. Subprime auto, you want to be safer on a lower credit box. And I think you want to be a little bit more proactive and, having things in place like Shaun mentioned about, repossession, retitling, all those types of other back end services. I do want to make a point about, and maybe I've already made it, but, I think this, transition manager credit or insurance, policy type thing just has to go in the trash, right? We just have to get rid of those things because there's too many other steps. We've talked about all of these other things that occur within a real servicing solution. And, to your point, Shaun, we've done over 450 successful, and Nicole, you mentioned this, we do it without bankruptcy. We do it without fraud. We do it all the time. We've done over 450 successful, conversions onto Concord's platform, over that 35-year period. And so, they do occur outside of an emergency situation. And I think we do a very good job of, making for sure that we do have the right amount of data and the right amount of time to be able to transfer that thing successfully with high performance. That being said, you will you have the potential for a hiccup in a transfer, but we do everything we can to mitigate that. And I think that's a really important word that everybody has to kind of cling to right now, is that there's not total prevention of everything, but there is best practices and there are better ways to be able to mitigate risk, mitigate loss, reduce performance, issues in really this entire scenario. And saving money in the front end is not how you mitigate and get a high rate of return on the back end. Just don't go together.
I think that, Nicole, to your point around bringing there's a playbook. There's a playbook that Concord and other third-party servicers use that migrate a portfolio. And it's an orderly, very structured process where we collaborate with the investors, we collaborate with the originator, we collaborate with the financial institutions and the depositories. We talk about all these different moving parts. There's the communication to the customer. There's the documents. Who's the custodian? Where are the electronic or mostly electronic documents today? Who's doing all of these roles and where are they and can be consolidated? I think that's something that, as Tom talked about, credit administration, and I think something that I did hear, obviously about, and we were talking about it at the ABS East conference, is this overarching view of servicing and maybe how it's evolving to really have a different view, whether it's backup servicing, shadow servicing, credit administration, deal administration, or fund administration, where one company is looking at all of this for the benefit of the investor, right? Somebody who has the capacity, the understanding, that actually does the work, that can monitor the work that somebody else is doing, right? I mean, if I want to have an accountant, monitor what I want to have an auditor look at what my accountants are doing. That auditor needs to know accounting, right? I mean, so you want to have a servicer review what a servicer is doing, that they need to know what's happening, right? I don't know if that's a good analogy or not, but that's, what I'm thinking in my head.
Yeah, Shaun, a couple things that kind of come to mind too in terms of servicing, and I know we've kind of been on our soapbox talking about this, but I cannot overemphasize the fact that if you have a relationship with a servicing company, they should and better well know and understand that asset in particular.
Yeah.
They should be servicing that asset today. They should have serviced it in the past, serviced it today, have the system and the software and the calculation. We do solar in particular, which has loans, leases, PPAs. And I'm going to tell you, there's multiple iterations of a lease and a PPA in terms of how those things are serviced, managed, calculated, billed, and so forth. So you can't have somebody on the back end that doesn't know and understand your asset in particular and how to service that with the customer service perspective and with the system and software. And then I think really importantly too is, the industry has learned this, and we talk about mitigating risk, is you've had this vertically integrated process today, or in the past, maybe it's going away, of an originator, a dev company, an asset owner, an asset manager, and the servicer. And you need to decouple that servicing. You really need to peel that off if you really want to enhance performance and you want to create an opportunity for greater yield and yield spread on your portfolio. And again, take that risk away. It's super important to decouple that risk and get that servicing part out of the vertical stack.
Yeah. And I want to just make a point too, is that, we're spending a lot of time, and, Tom and I are coming from our perspective, and Nicole, you as an investor and as, working with banks and a variety of, and your own firm today, look, this is not to say that companies who originate their own loans and service their own loans don't do what they need to do. There's a phenomenal number of great servicing operations within originators. They do it phenomenally well. But that doesn't mean what we're talking about here is the oversight, right? I mean, and when there are challenges with assets, I mean, that's this collaboration. This is the partnership. So if you've got an originator who's retaining servicing, and you've got investment bankers and investors who are working with them to do a structured transaction, ABS, ABF, and there's a requirement for some oversight, let's call it oversight, that shadow servicing, whatever it is, that role, who's monitoring the data, who's looking at it, who's validating the reporting, who's taking a look at the collateral, who's taking a look to make sure that there's verification of those underlying assets. Are they accurate? Who's got the access to the actual collateral itself, right? How does that transition if there's a need to transition? Because again, some of the companies that have transitioned servicing because of bankruptcy, there were macro events that occur sometimes that have to happen. So it's not about whether or not the servicing, third-party servicing versus in-house servicing is better or worse. That's not the conversation. The question is, whoever is servicing your assets, these are the things that they should be doing, right? And whoever's investing in these assets, you need to have somebody looking at what's happening, right? And how that gets put together. So that's the collaboration, the originator, the investor, the bank, the trustee. So, I mean, I just wanted to pull that together and just make sure that we're not saying in-house servicing isn't a good solution. It's a phenomenal solution for many, many organizations.
Yeah, good clarification, Shaun. We have plenty of clients where we're doing, shadow backup servicing, and they're doing a great job of servicing it as the primary. It's the, having somebody else on the backside, that can protect those assets and make sure that,
It's almost like adding, some checks and balances to the system in that case, sort of having that independent oversight, having that, that objective party, not unobjective party, I guess, the unbiased party, sort of being able to sort of check and make sure all the parties are doing what they're supposed to be doing.
Yeah, exactly. And I love the idea of the collaboration, the partnership. Everyone's in this together, and I think that would be ideal, the goal here. One group that we haven't touched on, and Nicole, maybe I'll ask you this question, is the rating agencies. What role or response? I mean, they have a responsibility. They look at the transactions, they give a rating, they look at servicers, they look at sub-servicers, they look at backup servicing. You see all the transactions. I mean, does it stop with the rating? Do they do a revisiting? But I'm just curious what your thoughts are.
So I do think the rating agencies do a great job of third-party servicer oversight. Like I think they're probably in your offices quite a bit, right?
There's due diligence.
Your policies, your
Yep.
practices, your procedures. So I think they're really on top of that. And you actually, when you're reading the reports, they always have a section sort of operational risk and
Yep.
sort of give an assessment on that. But so I give them points for that, and I think that they are doing some practices that more investors should be doing. Like I've worked with investors where some they never go visit the third party servicer, and ones where they are there all the time. So there's I think there needs to be more of the latter than the former. But I do think, and then the rating agencies may also be sitting on a lot of data that they can possibly be able to sort of see trends that, from sitting a little bit further away, a little bit, not as, they can maybe see the trees for the forest for the trees, whatever it is, because they're sitting a step away from it. So they might be able to see some trends before other people who are thick in the weeds of it. So that's helpful. But at the same time, I don't think it's the rating agency's responsibility to sort of pick up on all these missteps or all these sort of, pieces that are missing. I think it's really, it's kind of, as we sort of said, a collective effort to do that. I don't think in these situations that we're going to be pointing the finger at any one party saying it was absolutely your fault. But I think everybody's going to come together and be like, well, I could have seen this, they could have seen that, but together we probably could have put it all together and sort of paint a better picture and kind of investigate a little bit more what's going on. So yeah. I think the agencies are in a great position because they're sort of, in the center, they receive a lot of information. They really don't have a lot of, gain to play here in terms of, returns or fees or anything like that. But so they're somewhat objective, but at the same time, I think it's still responsibility lays on all the other parties to sort of, basically be, doing the same job, doing the same type of surveillance and oversight.
Yeah, no, thanks for that. I certainly agree with you. Tom, any additional thoughts around that? Or I think we've covered all the players in the servicing world and what it looks like. I'm going to give one anecdotal example. We were talking about this past week. Concord's been servicing for 35 years. Our first asset class, it's still a significant book of business for us, is vacation ownership, timeshare. And, so we were with timeshare when it was first going into the ABS market, right? And there was a time where, look, the reality of it is if someone's going to try to commit fraud, they're going to commit fraud. They're going to do whatever is people are saying, whatever the double pledging of assets, recreating of assets that don't exist. All of those things have been happening for a very, very long time. This isn't new. And we saw it early on in the vacation ownership industry. And there was a need and a push for third-party servicing, for oversight, regular audits. We would do verification calls to consumers. A big part of what is set up, these are just standard things. First payment defaults, why aren't people making that first payment? Making phone calls, that's a special queue. That's a special outbound call if somebody hasn't made their first payment. Verification calls, verifying, did the customer understand what they signed up for? Did they get the product? These are things that any servicer can do, or a third-party servicer, or you can engage somebody to do on that end. But the industry evolved and became an asset-backed securitization issuer, in the billions, because the credibility that the bigger firms brought to it, the credibility that third-party servicing brought to it, the need to control and monitor collateral, the auditing that went into it, everything that we've talked about here. This is everything that evolved over time that made what was an esoteric asset 20 years ago to a traditional multi-billion-dollar annual issuance of timeshare receivables, right? And it's not to say that all these other assets and the other assets that we talk about are much larger than vacation ownership. It's just an experience that Concord had. And, it's interesting that here we are talking about a lot of the same things, right? So,
Shaun, there's an old history book and it says very old, a little over 2,000 years. And it says there's nothing new under the sun.
Yeah. That's that. I appreciate the conversation. It's been great. Let's just talk about 2026 and beyond. Obviously there's lots of discussions around what AI means, and we've touched on a little bit around verification and data. Verification. How do you verify thousands and thousands of obligations? How do you make sure that the data is accurate? What can you find? What can large language models find when you're looking at data? Nicole, we were chatting earlier today. about an article that just came out. I think we're going to post the link, or maybe it's already there. Maybe you want to chat a little bit about that, specifically around the one that we didn't talk about, First Brands, and what happened there.
Yeah, and so I think the article that was published by, I think, Moody's Analytics, they said that based on some data that they saw, they were seeing some payment trends, some delayed payment trends as far back as, I think, last year or earlier this year. But the loan market just didn't pick up on it. In fact, they said the loans were trading, in the 90s well up until August, even though there was, this kind of picture sort of got bigger and bigger, and nobody really sort of stopped to say, what's going on here. But what's interesting with sort of AI nowadays, it gives you that power to be able to look at a large amount of data, very efficiently and very quickly. Like, remember the days where you had to sort of, create a sample of your verification, your audit, those days are gone. You can now do 100% of your book. And I think that's going to really kind of clean up a lot of the sort of missteps that we've made as we've dealt with new asset classes, 20 years ago when the technology wasn't there.
No, I agree. I thought that was very interesting and timely that they made that observation. It's just, again, the information is there. Again, it goes back to what we started out about: oversight, right? The data is there, quality of data. Are they ensuring the compliance? Who's looking at it? Who's looking at it?
And Nicole, to your point, with today's technology, now we can, no more excuses on the frequency.
Yeah, exactly.
Nice.
Exactly. Yeah, I mean, there's been many times I got daily data tapes. There's nothing I could do with it because, number one, I'm busy. I have stuff to do. And then what do I do with these hundreds of rows of data? It takes time to sort of put them in something and pop them out. But now it's just a lot easier. It's instantaneous. So.
Well, in that regard is, we still have a little bit of time left. Tom, talk a little bit about, maybe what you're hearing in the market, and even what Concord is doing regarding, verification and custodial, and how we try to, the market. How's the market looking at that? And again, using AI and technology to become more efficient, more accurate, more eyes on things.
Yeah, and I think to an earlier point is, really kind of an aggregation of those services, right? So when we're getting that data tape, I think it makes sense for, a Concord to be your custodian agent and then to be your verification agent at the same. So bundle all those things into house. And then, what are the data points that you're looking for? Again, quality, frequency. I think we're going to probably keep hitting on the same points and topics here, but not to be undersold on the value of those types of things. And then again, on things where I know we do a lot of unsecured consumer too, where there is no lien filing or UCC or title or those types of things. But in the scenario where there are extra measures or the opportunity to do extra measures to secure the interest in that asset, make for sure that those things are done and done affordably. To your point too, I know we don't want to pinch pennies. There are also ways to save asset owners and originators some money too, because you can in particular on the solar home improvement side of things is, you can kind of monitor the credit box. You can kind of monitor the current state of the consumer, if they're 30 days or so forth. But it's just more oversight, better visibility, on the services that are provided. And again, I really think we kind of need to get away from this segmentation. So many different folks doing so many different things, from trustees to custodian agents to verification agents to servicing companies and credit administration. We can bundle those.
Yeah. Have you seen any trends of people talking about sort of platform level servicing and administration versus sort of deal by deal, like each investor goes to their own sort of servicer relationship to sign it up? So you might have a platform that has 5 different backup servicers working on different parts of their portfolio. Have you sort of seen any more discussion toward platform level?
Yeah, so that's a really good point. And I think if you take a look at a current client that we're, a short period away from doing an actual conversion on the solar space, originally dating back a couple of years ago, there were multiple people that were backup servicer, multiple companies. Some were transition managers, some were trustees, some were direct with Concord. Some were in tri-party agreements. We had, we were sub-agent on, those assets through 2 different relationships. So there were like 5, 6 different relationships as a backup servicer to almost 400,000 obligations, several $1 billion. That's disjointed and that's not efficient, right? That's a really good point, Nicole. And so, one thing that, Concord is doing is this, we do this quite often where our client is the master servicing. They hold and retain servicing, and we're their sub-servicer as the primary, doing the billing, payment, processing. We also can be their master backup servicer to that originator and have all of them assets, basically running in parallel as a single backup servicer, shadow servicer, whatever we're going to call this.
I mean, we can operate as the primary servicer on a book of business and call it the backup shadow servicing on other asset classes. And it can be a variety of, you look at a fund level where they're investing in solar, home improvement, RV, power sports, elective medical. Acquired Orion. We acquired Orion first in June of this year, and they have significant relationships where they deliver that, what they refer to as this master servicing. We could call it fund administrator or master fund administrator, where primary servicing and they manage where servicing is retained by the originator, but our client actually owns those assets. So it's clear visibility across all of their portfolios, and it can go across all asset classes. And to the point of using technology and AI, you can validate all this stuff. You can do reconciliations. And again, it's a question of where's the custodial agent? Because I think one thing that is going back to the original conversation where we started with Tricolor is the collateral. Where was the collateral? Who was looking at all the different collateral from a double pledging perspective? But I think technology from a standpoint of data, the ability to do verification and the visibility of all of this, and this idea that consolidated fragmented markets and bringing it all together, there's opportunities for that. But I love the phrase or the point that we talked about is it's all about collaboration. There's a place for everyone. There's a role for everyone here. We're wrapping up. It's been a lively conversation. I really appreciate it. I mean, Tom, do you want to just give your last thoughts and then we'll turn to you, Nicole?
Yeah, I think I'll make it pretty short. I just feel very confident that we have systems and we have methodology, people, AI, we have all of the things in place today to create, additional security with these assets and to mitigate the risk of fraud and to help out in the scenario of a bankruptcy. Let's just be super proactive. Let's be very transparent. And, again, we'll probably keep saying this. Let's just continue to collaborate and have a better product.
So my couple of thoughts are, number one, I think you should run some type of campaign on, come up with a better term to backup servicing. Like
let's do a survey. We'll do a survey on LinkedIn.
Amazon gift card or something like that. Or a trip down to Concord down in Arizona for a tour of your facilities. Secondly, I think what I liked about your idea that you were just talking about, Shaun, is you're having sort of credit administrator for a fund, and then if you could sort of feed that into my have your API feed directly into my reporting systems, that's even better. It's like it's just sort of seamless transition. But so those are my things. I mean, they're all kind of related to risk mitigation and technology. They kind of go hand in hand.
That's great. And I appreciate it. This was a great conversation. Obviously this is stuff that we do every day. We're very passionate about what we do. And I do want to just, again, reiterate the fact that there are quality third-party servicers. There are quality in-house servicing operations. All we're trying to do here today was to bring and highlight some of the areas that may have been overlooked, that we have to pay a little attention to, button it up and collaborate so that the originators, the banks, the investment community, and most importantly, the regulators are happy, right? Isn't that what we really want to make sure? That the regulators are good.
We also want to make money, or we don't want to lose money.
We want to make money. Absolutely. I mean, at the end of the day, we want to make money, right? So I think that's all good. So I appreciate your time, Nicole. Thanks again. Look forward to seeing you soon. And Tom, again, talk to you probably tomorrow. Well, you're on vacation this week, so I won't talk to you. So enjoy your vacation. But thanks again. All right. Take care.
Thanks,
Thank
everyone.
you. See you. Have a good afternoon. Bye.
Bye-bye.